let me know when you're ready. Okay. All right, super. Thanks everybody for coming today to our session. We've got some great folks here to talk about Taproom Accounting. We're going to run this like a conversation. So we'll go over some topics and feel free to ask questions as we go along. We'll leave time after the discussion as we run through for everybody to ask questions in each session. So let me do some quick introductions here. We've got Dave Oksenhorn, Director in the Research and Development Tax Consulting Group from Marcum LLP. And he has been an active member in the firm's Food and Beverage Services Group and advised a lot of different breweries, large and small, on their financial statement reporting, tax compliance, planning, and business consulting. We've also got Jim Now and Erik Coleman, who are both with Rationales, a New York State focused craft beer bar in Buffalo. Jim is also the owner of EBC West in Fredonia and was with U.S. Foods for 5 years prior to that as a restaurant operations consultant. And he also worked as the Director of Operations and head brewer for El Cap Brewing Company. Erik is beer by Coleman. I think everybody probably knows you. And he does consulting for existing emerging breweries, tastings, as well as tours, and brings his passion and love for craft beverages to everybody. He's also the director of Trocaire College's brewing distillation fermentation program, and like I said before, co-owner of Rationales. And thank you all for coming. And I'll pass it off to you guys to start.
So I think just to start off, just to kind of...
Well, first, can everyone hear us without the
that's
mics,
true.
or do you want the mics? Pretty good? You're good.
Okay, let's get the mics.
Awesome.
Yeah.
Can you talk quieter? I was off here.
And feel free to move up if you want to. And just a quick note too, their contact information will be on the slide at the end, so that if you want to have that for contacting them later.
So just to kind of poll the audience, just so we kind of know who's in attendance here, just by like a raise of hands, how many of you guys have a tap room? Okay, so that's good. And then as far as like the number of employees you have, and again, we're just trying to gauge the audience and kind of just tailor the presentation. So show of hands, as far as the number of employees, like no employees, 1 to 5, okay, 5 to 10, or greater than 10, okay. And then as far as annual barrel production, how many of you guys are doing under 100 barrels? 100 to 500? 500 to 1,000? And then over 1,000. Okay. So I'm going to put it in the, again, we're going to keep this like a conversation, so we'll kind of just tee up some of the topics. We'll go through some things upstage here, but then additionally, we'll kind of pause and you guys can interject and ask questions about things, and we'll focus on more of the topics that are going to be of interest to you. So I'll just throw up here so we're going to have accounting and costing, tracking costs with systems, prime costs, and then event costs, tracking and best practices. And we'll try and hone in on the ones that we see are more of interest to you guys. So we may or may not touch on all of them, but we'll go through it. So if we start off accounting and costing, this is kind of going through your brewery and separating it between the brewery component of it and a tap room. So kind of the question you ask yourself, are you a brewery with a tap room or a tap room with a brewery? And by that I mean, like, are you more focused on tap room sales where you have a lot of people, a lot of traffic, most of your beer's going out the door in the tap room? Or are you more wholesale distro? So like that's kind of that conversation there. Like I'll leave it up to Erik.
Yeah, one of the things to think about, and over the last couple of years it's become more of a very prominent conversation in New York State. There's a significant number of smaller production facilities, but it's not something that the larger ones will face. Is when you're shifting, saying I'm going to open up a brewery, open up your brewing company. Okay, now what? What's next? Is okay, I'm making beer and I'm trying to sell beer and you're trying to generate revenue. Then you're starting to think of that taproom experience, and that taproom experience can be, hey, I've got 4 taps, and somebody comes in, there's a few stools that they stand and they taste, and it's right next to the production facility or in it, all the way up to there are some brewing companies out there that have beautiful, elaborate almost a full-blown large restaurant event space experience that complements with the brewing company. So I guess it really is gonna come down to, when you're thinking about the accounting purposes, once you start shifting to that tap room, if you don't have one, really start to think about how you wanna start it out and where you wanna go, like what's your end point, what's your final goal? And then also, if you happen to be even a larger production facility with a smaller tasting room, that might be something that you're not as familiar with. So as you're coming into that, you really wanna take that into, no pun intended, account, just because those numbers, there's a number of brewing companies that have a decent restaurant, and as they're opening up, a portion of their, like, that tap room will help make or break sometimes some years and numbers depending upon what's going on and everything else. So those are some things, as we go through and answer questions, you really want to kind of have that in mind.
Yeah, so the genesis of some of this conversation was when I was at EDC, we went from having the one small location in Ellicottville that had a 10-barrel system and some contract brewing to building a larger production facility, to then now there's multiple brewery locations. And it was really came down to, we kept everything kind of commingled, right? And at a certain point, once your tap room becomes established and your distribution, say your off-premise that we call it, gets established, you need to account for those as two separate businesses. One of the best practices that I thought we came up with and we come across, and hopefully you're doing this, is your brewery should be selling to your tap room, right? You should look at those as two standalone businesses, not just, hey, I'm going to put it all together and see if we were profitable and made money or didn't, but look at your tap room as if it were just a regular restaurant or craft beer bar. And you're buying that beer from, you may be buying external beer as well, but you're buying that beer from the brewery, and judge yourself against the metrics that regular restaurants would look at. Same thing on the brewery side. Are you a profitable brewery only because you're selling all that beer over the bar, and now you're thinking about expanding and doing distribution? You need to look at that brewery as its own standalone entity, and is it profitable making beer and selling that beer even to the tap room at a wholesale price? It doesn't mean you have to be profitable in both of those, but really looking at that breakout. Because in my mind, when you look at tap room expenses and accounting and everything else like that, you look at brewery expenses and accounting and everything else like that, and David can talk more to this, that brewery is extremely capital intensive. Restaurants aren't nearly as capital intensive as the breweries can be. And that restaurant is heavily driven on prime costs. We're going to talk about it later, but prime costs are what drive the profitability in your tap room / restaurant. And you really need to look at those differences. And there is folks out there that think of the food concept. Like we say tap room, it doesn't necessarily have to include food. Yes, you need to have a food component in New York State to be selling the alcohol, but maybe that's something that you carve out. Maybe you don't do your own kitchen. You got to look at those numbers accordingly. You will be percentage-wise more profitable if you don't. Food is not where restaurants and tap rooms make money. It's all in the alcohol component of it. But you still need to take that into consideration. I'm not advocating you do or don't do your own food. There's a lot more cost associated with it. There's a different profit margin associated with it. You just need to have these components broken out and tracking those and comparing them to the industry standards that are out there.
I think the thing that you mentioned too about breaking it out as far as the two businesses is also like on the accounting side of it, and you can do this different ways. You can have different general ledger accounts where you have for your brewery side, the production side versus the tap room, like maybe the front of house staff, like your bartenders and other customer facing individuals versus the brewers in the back. But then additionally you can do other things too, like set up classes. If you use QuickBooks has this ability to do it, and other software does as well, where you can be tracking certain things, and it also depends on if you want to go through this full analysis, if it makes sense to do it or not, but you can track things like draft sales in the tap room versus like your sales, and even retail sales of cans versus distro cans and different things like that. So you can do that analysis and have it's one company as a whole, one entity, but in one set of books, but then from there you can delve down and really drill into it and see, okay, like the tap room is doing all right, maybe I should focus heavier on distribution because I'm really not getting a lot of people in here. And we'll talk about some other things like the prime costs and labor costs that associate with the tap room. Seeing how many days a week you want to be open, but having that information available to you in that type of format, so you can analyze it and see what you want to do, where you want to spend more money, and where if it's going to be on the wholesale or the distribution or tap room side, and then just having that analysis. But obviously, if you have a very small tap room, and that's the way you're going to have it, it's more or less just people kind of few people coming and going and you don't see a lot of traffic, maybe the analysis of going to that much detail doesn't make sense, but doing at least something so you can have some type of breakout, so you can go through that a little further. And then to Jim's point about the kitchen, like you talked about having an in-house kitchen or even farming it out to a third party, because obviously you have all the licensing and there's the pros and cons of that, of having your own kitchen versus having someone else run it for you. It gets, you're not going to make, it's not a profitable part of the business necessarily, but it gets people to stay if you have food.
It also gets tricky. I mean, I've seen models where the ownership is different on the brewery and on the kitchen component of it. It better be a good relationship. It better be, hammered out, because there's going to be situations where, I saw your question will come right through. There's going to be situations where there's going to be a disagreement. Hours, pricing, what happens if your beer is really priced very aggressively, draw a lot of folks in, and then that food is priced very high, right? Or vice versa. What if they're not the best operators in the world from a kitchen perspective and don't realize they're not making a profit where they're selling that food? They could go out of business. They could just, you could be in a place where, yeah, they're semi-profitable charging that price level on food, but you can get a lot more for that beer. What does it look like when there's a huge discrepancy in the price of the beer versus the price of the food? So there was a question here.
Yeah, so I'm opening up a brewery in Hudson in about 2 months.
Okay.
And we were
Hudson, New York.
Hudson, New York.
Love that city. My son's name is Hudson. That tells you how much I love that
That's
city.
great. So we were considering farming out the kitchen to a totally different business.
Mhm.
However, our lawyer, who's very well versed in liquor law, said that it's actually illegal to do that. Not anymore.
They can't.
They can't.
They can't, what?
So when did this legislation?
No, that's okay.
No, yeah, we're not
jumping.
we're not the legal. Yeah, we're not the attorneys, so, yeah.
There is a legal thing there. There definitely is a legal
Right,
thing
just
about
change
having
the
something operating.
They cannot operate in your licensed premises.
Yeah, they can't. The general rule is you can't have another business operate inside your business.
You would carve out a separate space, it could be even like,
So our
Like that.
space is not a separate space.
Rob, I-
One-
Yeah,
wall
but
and a
Jen, was
door.
there an update?
Well, what, so maybe I'm wrong. I thought the rule was changed last year, maybe it's that, maybe because the residency that we confused with, but now we can have a vendor, as long as it's one vendor at a time, operate out of our, so we can have one caterer, there's one caterer, there was a law within the last year.
Yeah.
So I don't want to speak, I'm sorry, I don't mean to confuse you, but something did change last year specifically for that, so that you can't have someone come in and do yoga. You can't
Yeah.
have someone come in and do that, but it could only be one person at a time.
And there definitely are ways around it, at least in my non-legal opinion.
Legally.
yeah, yeah.
Legal ways to make it work as
But who
far
wants
as,
to get in trouble with the SFA?
Well,
but I think, yeah, go
Yeah.
ahead.
Did you have a question around the accounting aspect of it?
Yeah.
No, but I just wanted to say that, the concept of having a different entity kind of run the restaurant piece and you doing that seemed very implausible in our business case.
it's possible, but there's a lot of loopholes and navigation you're gonna have to do it, and you're definitely gonna retain a lawyer to help you get through all of that.
Yeah.
Were you looking to do a full kitchen too? Because the other things that I see people do is, as a quasi workaround, is so you don't have to go through all the kitchen licensing. It's like more like prepared food type stuff where you're just doing like, okay. So I mean, obviously, full kitchen is more attractive to customers and keep people. But I know some people who are like, I don't have I can't have more staff, but I can send my bartender back there to go fire like a frozen pizza into the toaster oven. That's and that passes muster with SLA and health department and everything else.
I've seen situations too where it's not necessarily legally a different business, but it's a sub-business of the business, or one LLC owns this other LLC that does this, and you only allow that individual. So I would get in front of a lawyer for that component of it, but the only thing I would point out is it's clearly more, you're running less revenue if you're just doing the tap room and not doing the food, but it's usually the more profit. When I see those situations, I typically think, what is this food vendor thinking? Unless they have, there's also established food vendors,
Yeah.
food trucks that
Yeah.
draw. That's another thing we haven't talked about is,
Conversation.
yeah, if they draw and they bring people into your tap room, that's a great start for a startup.
I'd say too, just as an add-on, it's important to think about the impact of having food versus not having food, right? On the beer side, right? Not like actually how many drinks will somebody have. If they can have food versus they need to leave because they need, that's not,
Yeah.
so.
Question or follow-up?
So, just, that was another topic I wanted to have. So, what price do you charge to your tap room? Do you do FOB? How do you, because I don't know what number it's.
It's a great question. So
Yeah.
I personally don't have that situation anymore. I buy from EDC, and they sell to me, not through a distributor, because it was an existing relationship. But when we were there, somewhere between what you'd sell it to your distributor for and what your distributor sells to your tap room for. And that really depends upon, there is an extra margin in there, right? It's that distributor margin. Who you give the credit to that to? In my mind, it probably makes a little bit more sense for the brewery to take the extra margin, so sell it to the tap room at the price that the tap room, I'm a restaurant guy at heart too, though. I'd sell it to the tap room at the price that the tap room would probably pay for, or maybe a little bit discounted or something along those lines.
Yeah.
But the reality is, I buy the beer from EBF. Legally, I'm an on-premise liquor license. I am not owned by EBC or anything else like that. A standard tap room license, and I'm able to buy it at the price that EBC sells it to the distributor. Because that was the agreement that was worked out. I think it's probably better accounting, especially from the restaurant perspective, to take the extra cost at the restaurant and let the brewery have the extra revenue. Because it's a good relationship.
We sell it with the distributor and sell it with retail.
Yep.
Yeah,
Because if you think about it, if the brewery's selling $70 a pint, that extra $50 to the brewery, in a way, is more important than
Yeah.
It's also, you may put on other beers, like we do guest beers at EDC West, but now the tap room does all New York State beers. I want to know relatively where I shouldn't be pricing in the EBC beer cheaper just because I buy it cheaper. I should price it accordingly to what it would cost me to buy that beer.
Yeah, Matt, good person to talk to, he's not in the room, I don't see him. Matt Kahn is a good person. I was fortunate to help with them opening up. He sells it in the tap room, and he would talk about it was beneficial for him, because as you all know, especially when you have a decent sized investment, if you have a larger production operation, the more you can flow back into the brewing company. So it's your discretion.
Typically,
But
the revenues, I would assume, again, I don't know the microbrewery,
Yeah.
but I gotta think the profit margins are, it's greater revenue, but smaller margin
Yeah.
on the production. It's greater margin, maybe smaller revenue on the tap room, depending upon the layout. Question in the back?
Yeah, the question that was raised earlier, I think we might have an answer to it if you want to ask the question
Sure.
again.
Yeah, there was a question about food in the tap room.
The requirements legally for having another operator operate the food app component of your tap room.
Oh, having another operator in.
Yeah.
another vendor.
Stefan, is that you in the back?
Yeah, yes, it is. Hi. You could do, what's that?
You know anything about this?
I do know. You could operate under a concessionaire's agreement by having someone else operate in the tap room. That's very simply, it's the agreement between the person that you're working with, that's going to be doing the food, and you, and how that's all going to be taken care of. But it is legal to do.
Is that what changed?
For those of you who don't know, if you have a lot of questions, Stefan is our development liaison to the New York State Association, and so, not to have you out there, but he has a phenomenal wealth of a lot of information, so feel free to, sorry, just maybe put more work in here. But
No, that's what I'm here for. That's all.
The only other thing I want to say is, I think it's very important to have, as an operator, you have an operator, you have an accountant here. It's very important to have an accountant that understands this. If you're a production facility that has a really good manufacturing accountant that doesn't do a lot of restaurants or tap rooms or stuff like that, you got to make sure that they're going to be able to help you through that process and understand that process and work with you towards, not only your accountant, tracking and doing all the taxes and stuff, but they should be kind of helping you financially guide decisions along those lines. I think it's really important to have a good accountant that does that. And you may be coming from the other direction. You may be a tap room that does most of their revenue over the bar, and you're thinking about going into larger production or building a production facility. Then you better have an accountant that can really work with the more the manufacturing component of what making beer is. I just think that third party is very important as you're growing. Question?
Yeah, so I guess my question is the wrong name on the side of it. Is we have 3 tap rooms, we had 2 breweries, we have probably 1 brewery now. We fall into the category of we're tap rooms that make its own beer. We do very little distribution. and we don't currently sell beer to tap rooms, but I do like constantly, we use QuickBooks, we use the classes. So is that like an actual invoice or just like an internal? Like
It's more like an internal, I mean, I'm assuming, do you have like one,
It's all one company. One
but I mean, like, do you have like one production site that's then feeding the different
Yes.
tasting rooms? Okay. So then you could have like that location kind of essentially, but it wouldn't be like a true, you wouldn't necessarily have money changing. It's all in the same entity, right?
Right.
Or do you have, so then you wouldn't necessarily have to change hands as far as the money's concerned, but you could do like an internal invoicing situation or journal entry to kind of track it. It's probably the easier thing to do. I mean, I don't know if there's anything else as far as like. I know there's
Just
bonding
be
rules.
careful, because, even at EDC back then when it was small, right now, the bigger you get, the more you silo these operations, but back in the day, the brewer was changing kegs and doing stuff that was either a distributor's job or even like a bartender's job or something else like that, and making sure that, you may have some employees where you need to push some labor from one class. It should be straightforward if your brewer's just brewing, your production is just doing
That part is all pretty well siloed. We have some
Yep.
employees who work in bulk
Yep.
locations in New York City and track their hours, costs.
That's
They
it.
don't inflate our
Yeah.
revenues, because we're not, it's not real expensive. Not too expensive.
It would just, because it's one combined entity, it would essentially just like, in combination, it would just zero out. So you'd have like revenue up top, then you have the same cost, it would kind of zero when they come together. So it's just for internal purposes when you broke it apart for analysis.
We always try to back into it, figure it out, but it'd be nice to.
Yeah.
Some journal entry.
Is this a good sort of entree into talking about systems?
Yep.
Because some of the
Yeah.
systems will do that too. I know in Ecos, we actually do sell to the tap room through Ecos, right? And the money changes with the systems.
So being the restaurant guy, before we get into the brewery tracking systems, I'll talk a little bit about the restaurant tracking systems. And that is a case where you may want to create some sort of phantom invoice, because, so there's a lot of restaurant-driven, there's Restaurant 365, it's only the larger ones. If you don't have a multi-million-dollar tap room doing that kind of revenue, it's probably not worth it. But I think the number one system that you need to have in there is your POS system. Because your POS system is going to do all your sales track, tax accounting, probably going to do stuff with time and expense for employees and tips and everything else like that. We're doing another session, Erik and I, at the end, we're doing the very last session on service models. The POS system you pick is going to have a lot of influence on the type of service model you can do along those lines, but there's a huge amount of data and information that's coming in on that POS system, and using the right system, investing in that. I could spend an hour talking about POS systems, I'll geek out on it, but having the right one in place is going to help you do a lot for, not necessarily just tracking your costs, but you look at your costs compared to your sales, just tracking the sales, breaking out the sales, looking at that information. You step away from the POS systems and then you get into things, like I said, Restaurant 365. There's a program out there that I use called Craftable, and what you're doing in these programs is you're managing your prime costs. So let's take a second to think about your tap room. Forget about the brewery, you're selling the beer to the tap room. You need to manage that like any other restaurant would, and when you think about a restaurant, 60 to 70% of the costs that go into a restaurant, cost of sales, is prime cost. It used to be 30, 30 on prime cost, 30 on labor, 30 on food, 30 on overhead, and 10% profit. And any restaurant guy would love to have 30, 10 right now. It's just not the case. Labor has gone up. So tracking labor is fundamentally extremely important. You are all breweries, you all have physical manual labor people, especially even in your restaurant. They need to be paid on a weekly basis. Some of your management folks can go every 2 weeks or a month. But if you're paying them on a weekly basis, you should be tracking your labor costs on a weekly basis, figuring out it's going to move. We had a busier than normal week. We ran a really good labor cost. We had a slower than projected week. We ran a little bit less. But you really need to be tracking that all in, too. You pay payroll taxes. You pay payroll taxes on the tips that you're serving. It's great to sell another $1 worth of revenue. When you sell another $1 worth of revenue, all things being equal, your profit doesn't go up by $1. You have to pay taxes, payroll taxes on the tips on that $1. You have to pay insurance money on the increased sale. If your liability insurance on the restaurant side is auditable, you may end up paying more insurance on it. But you need to track those costs. You need to track that labor on a weekly basis. You get to the cost of goods side of it. That's where you're talking about selling the beer to the tap room, and then you're trying to hit your target cost of goods. Beer is a better cost of goods than food. Food is going to probably be north of 30%. If you're lucky, you're around that 30%, depends on what type of food you're serving and everything else like that, but you may not do that weekly. I think ideally you should do it weekly. If you're doing $1 million in revenue, you should probably be taking a weekly inventory, looking at weekly sales, looking at weekly invoices, and coming up with your weekly food cost. But if you're less than that, maybe you're only doing it every 2 weeks, minimally, you should do it every month. But having a software program that where you're tracking this information, I think is fundamental. Because if you don't do that, what you're doing is you're giving invoices to the accountant. And they're maybe doing your summary of your books maybe on a monthly basis, sometimes just on a quarterly basis. And then you may or may not be adjusting for changes in inventory or everything else like that. Maybe the sales don't quite line up to the month, you keep a week in, you don't put a week in. You're getting rougher picture of the data. It's still correct, it's a rougher snapshot of the data. And by the time you gather the information, give it to your accountant, and they give it back to you. Even if it's on a monthly basis, it's on average 30 days old by the time you do it. How do you react to that? Ooh, we're running too high of a labor cost, or we've priced something wrong on the menu, or we're not charging the right amount for this. So having some sort of program in there that integrates into your POS system, you don't want to be pulling that out of one system and this system and this system. That's how I did it when I was with EDC. I did a lot in spreadsheets. There's tools out there that cost you a couple $100 a month. And if you think about the cost savings of managing and tracking those prime costs on that $500,000 to $1 million or even more restaurant, it's really not a lot of money. You're spending 0.5% to 1% of your sales to really dive in and track these costs so that you can get a better cost when the accountant actually puts those books together for you. So spending the money on that is really a good question.
Jim, are you putting your food costs into the POS system? Because our gathering thing right now is not, just isn't putting them in, I'm putting $50 and so I don't know how you track, it tells me that no food is shit.
So I've yet to come across a POS system that does all of the other, call it prime cost tracking. That does it great. Toast, I think, I'm biased, I think it's a great POS system, but when they try to get you to use Extra Chef and all of these other costing tools that are built into it, they don't do that nearly as well as they do the POS. And then, I'm only going to talk about the ones that I've used or I've seen. Restaurant 365 takes a lot. It's probably one full employee. You better be doing $8 to $10 million in your tap room if you're spending, something on this. Is maybe you're a multi-unit business, and it makes sense to invest in that kind of money. But Craftable is one that I've used, and Craftable doesn't do the POS. It just says, hey, we'll take your POS data, we'll take all your sales data, but now in this tool, you're going to either electronically or quickly manually bring in your invoices. You're going to take the inventory in our tool. The holy grail when you're trying to track prime costs, and especially cost of goods, is I need sales, I need invoices, I need inventory at some periodic level, and then if you can actually price out your menu, right? That's the other thing that a lot of folks don't do. I'd say 80 to 90% of restaurants don't sit down and say, I'm going to sell you this, to keep the numbers easy, $20 hamburger. How much do I have in cost of goods to make that $20 hamburger? If I'm doing my job, it should be around $6. It should be around 30%. But that theoretically pricing it out, that should be done as well, so that you can look at, you don't really care about what your food cost is. Once you've set it up in your business plan, you don't really care about what it is every week. You care more about like the variance. Are we losing food? Are we not? Are we throwing stuff out? Is stuff being stolen? I can guarantee you in every restaurant, there's some amount of theft. An employee comes up, has a bowl of soup on the house, that's kind of theft if you're not reporting it and then discounting it back out. So getting a software program that tracks that, it is an investment in time and effort, but if you're doing enough revenue, really you can really control it. And again, that's 60% of your costs. So yes, to your point, Fred, they should definitely be doing it, but doing it in the same software program, I think, I've never seen a POS system that does that tracking.
The tough thing with some of the POS systems is like they don't play nice with things like QuickBooks. Like I've seen people who use Ecos for the inventory tracking and it's great, and then they try and integrate it in so that they can have it all in one place, and then it's just a mess. So oftentimes, they actually said, keep them separate, still track it, and then as far as like integrating in the books, you can just journal entry it in, on a however monthly basis, quarterly basis. If you need it on a weekly basis, you can do that too, but keep the raw data in a separate thing, because a lot of times it just doesn't come in well. Even things like Square, where, you know, you have swipes and things like that, it comes into the books pretty clean, but there's things to keep in mind, like it's gonna come in net of credit card fees, things like that, so you gotta gross up sales, so whoever's maintaining the books or if someone's analyzing it, just kind of keeping that in mind. But as far as the costing side of it, also just kind of keeping real-time costing, because then you can see if you need to substitute out ingredients for something else, because obviously supply chain issues or just costs are continuing to increase, so that $20 hamburger jumps up to, instead of $6 costing, maybe it's 10, because of, you know, some other shortage of whatever else kind of meat blend they're using. So all those things. I know there's a question in the back.
Does Craftable have a labor aspect on it? I know, like, for me, the food cost math isn't so much a struggle, but it's the struggle comes with labor where someone's in overtime this week, someone's not in this week, we had tips, and you have to factor in payroll costs and workers' comp, and, you know, you pay, running payroll and all the taxes that go along with that. Is there any programs that you use for the labor aspect of it that you recommend?
Craftable has a labor component. It doesn't do your payroll, so all the taxes and everything else like that, you could load for it. You could say, hey, my taxes are going to need 8 to 12% load, whatever, depends on your situation. I would recommend, I guess my question back to you is, what do you use for your scheduling and everything else like that? Do you do any kind of online scheduling or?
No, we do it manually, like through Excel sheets with, you know, who's scheduling what.
Yep.
We track it all in the POS, it's all in, all that data's in there, and we use ADP, that we take from the POS.
What POS do you use?
Heartland.
You may be able to pull some report, again, before you look at taxes and everything else. And taxes are pretty substantial. When you look at a load on a server that might be making tip wage, but they're making, you know, tip wage is $9.40 something per hour, but by the time they're doing their tips and everything else like that, they're making $35 an hour. You're paying taxes on not only the $9.40, but the difference in there as well. So that load can be pretty substantial. You might be able to get some information out of the POS to kind of look at labor and everything else like that. But I'll tell you personally, the actual labor numbers that I look at every week, I compartmentalize my employees, front of the house, back of the house. Again, I'm a restaurant, you might have front of the house, back of the house, brewery or delivery, whatever it is. But you compartmentalize those, you take those department totals with the taxes in there and everything in, and then you compare that to a net sales. I always look at net sales, I don't look at gross sales, because I just think that's the profit, right? The net sales is what you're gonna be driving profit off. I do it in a spreadsheet. I have a spreadsheet that daisy chains every week. I can see any one given week. I can see what that week looks like compared to the year, see how we're tracking, and then incent some employees in your restaurant to help you manage that labor cost. If you have a GM, they should definitely be incented on prime cost, you know, combination of incent them on what they can control. If you have a floor manager whose only job it is to write a schedule and cut people, maybe you incent that floor manager if they can keep your front of the house labor, your servers, bartender supports that. If they can keep that at your target percentage, somewhere probably between 8 and 12%. If they can keep that whatever you want it. If they get to what you did last year and then make it a little bit better, share in that money with them. The other thing I would look into, and we won't talk about it in this session, is there are relatively inexpensive labor tools where you can write that schedule online, you can publish that schedule to the employees, they can change shifts, you can track all of this data in the cloud, you can see when an employee clocks in late, you can see when an employee is approaching overtime. Those tools will ultimately then pass to your payroll provider, but you'll start to see a lot of that information. You can get alerts, you can get missed clock-ins, everything else like that. Those tools give you a lot of reporting data. But I think the other thing to mention, because we should move on, is that's just Taproom, right? You have these systems in your brewery production side of it. I don't really know what you probably know what.
I mean, you're not gonna have a POS for the brew house, but you're gonna be trying to make sure that you break out costs similar, and you're tracking your inventory, and you're looking at that in real time, so that you're not looking at it on an annual basis or too far out. Obviously, like, depending on how quickly the inventory turns and how much beer you're producing, how regularly, is gonna dictate how much analysis you do and how frequently you do it. But this way, you're gonna be looking at things and being able to analyze costs specific to each beer. I mean, you can take it down to like a really extreme granular level, but if you have to determine if it makes sense to devote that much time, like you had said, for using something like a Restaurant 365 or similar, like you almost need like one person dedicated to that. So on the brewery house side, you can need a similar type person too. So some of that can be like part of the brewer's job as far as logging things and making sure that they're updating costing and stuff like that too, but you have to determine like how much effort is worth, how much is worth doing.
At a minimum, my suggestion, even if you're a small tap room, is do the theoretical side. Look at what your current cost of what you're paying for things, and make sure that you're roughly at that 30% cost of goods on your food. I think some people just think, well, the market's here and I gotta charge this, so I can only charge $14 for this hamburger. But in reality, it costs you like $6, $7 to make it. You have 50% food cost on that hamburger before you even then put in the labor to do that, right? You're paying those back of the house folks labor to make that hamburger. Your total cost on that, again, go to the $20 hamburger, if it's 30, it's not, maybe it's more like 40, 25. That's 40% labor, and then that's $8, and then it's 25% cost of goods, that's another $5. You're at $13 to make that $20 hamburger. You got $7 worth of gross profit. There is some gross profit there in making food, there's no doubt about it. But you pour that beer for $10, and even when you account for the fact that you paid the distributor price to bring it in, if you get $8 to $10 on that beer, I mean, your beer margins at a distributor price point should be somewhere in the mid-20s to, if it's really expensive stuff, you could get up below 30%. You are substantial. You're paying the bartender anyway to serve and do whatever else. You're substantially more profitable on that bar. Breaking those costs out by bar and food is a must. But also theoretically pricing that's what's really important. And the tools like Craftable I talked about, if you have chicken wings priced out and you bought this many literally individual wings, it takes about 220 to a case, and I say why I still remember that. But if you brought in 2 cases, that's 440 wings, and then you sold 40 orders, you sold 400 wings, you better have about 40 wings left over. These food tracking things will track like how much variance, like how much did you have left over. Does that mean people are making them and giving them away to their friends and stuff like that?
Does Craftable integrate well with QuickBooks on
It integrates well with QuickBooks Online. I actually integrate it in with QuickBooks Desktop, so it will do both. The nice thing is too, as you're bringing your invoices in, I don't work for Craftable, I swear to God. They should be here, I should tell them. When you bring your invoices into Craftable to kind of manage that prime cost, the nice thing is with click of a button, you can push it over to QuickBooks. You don't have to double enter those invoices. And then when they're in QuickBooks, now you're talking about paying bills, giving that information to the accountant. So, but yeah, it has been one of the better, and it integrates with multiple POS systems, but they don't want to be a POS company. They don't want to play the POS game. They want to help you manage your prime costs. And it's
have you found a good way to track employee year? I know it's right. So it's a great morale booster, and I know it's tough to navigate, but I would love to be able to track it. But then I also know how long they can answer. So how do I know? There's a balance.
That may not be
Right.
well, first of all, I'll let him answer part of it, but I think you have to, like you have a wall for the restaurant and the brewery. That's kind of what we're talking about at the 10,000 foot level. I think you need to have that wall for your employees too. It's different for a guy in the brewery to take home a 6-pack or drink a beer or do whatever than it is for the employee that's working more in the tap room to drink that beer and do it. And it's different things. There's probably a little bit more risk of injury working inebriated in a brewery. So maybe it should have be one policy there, but I can tell you from the other tap room side, it's less about injury and it's more about either theft or abuse, or it's about customer perception. I think it looks very poorly to have employees drinking while they're working. But that at the same time, if I owned a brewery, I might let the brewers dressed like this, who clearly aren't working in the restaurant, sit down and have a beer and interact with the guests, because I think the guests would appreciate that. But as to the actual policy, that's kind of up to you. I'll say one more thing before we go down to accounting. Talk to your insurance person, talk to your legal person. There are ramifications for giving someone that alcohol for free, especially if it's a use it or lose it, meaning if you don't drink it that day, then you lose it. I have had many conversations. I personally do not allow anyone to drink for free, or I'm very limited on that. I give them a substantial discount so that it's not like it's use it or lose it. And I think that, if God forbid anything ever happens, it takes a substantial amount of risk liability that I'm going to get. You can sell it to them at a low cost. one. But making it be a transaction, A, requires the tracking, and B, I think mitigates a lot of your risk. But anyways.
No, then you just touched on the majority of that. It's gonna come down to what do you feel comfortable with? You know, legally, should you be doing it? No. Most people do it, a lot of them do. And the way if you don't address, you know, because Jim touched on a lot of that stuff. So therefore, you're walking out of there not being, you know, the quote unquote, oh, Jesus Christ, they're always up here, whatever. Let them know, it's like, listen, I want to make sure we stay open, I want to make sure you're making more money, so I need to account, you don't have to say every ounce, but literally, as you all know, you know, it's liquid gold, you got to pay attention to that, because you want to account for it between the tappy keg, that somebody accidentally agitated it too much, and then next thing you know, you have somebody pour out some foam for each keg, so there's a loss, and then all of a sudden, you're giving away some extra free samples on accounted for, it's been, and then, oh, I want to give a shift beer away, or a substantially discounted beer, you could lose 30% of a keg before we even start clocking the profitability on that keg, and I don't care if you're small or large, that can add up to some real numbers, so you just let them know, say, listen, I want to ensure we're going to be able to constantly keep pace, allowing you to make as much money as you're capable of making, provide you the necessary tools to be the best you can be at your position, whatever that is. And the way we do it is, a lot of people, whether you give one away or you give the substantial discount, it's just create a button and work with POS. And you can talk, Jim's more of the POS guy than I am per se, but there's a way where you can calculate and say, listen, this isn't a judgment tool. If I see you having 4 pints, you're still sitting at the bar and you're getting a little sloppy, that's a reflection. I'm gonna say no, because that's a reflection on the establishment. And you can let them know, say, listen, we just need to do this, so therefore, at the end of the day, I'm able to keep doing what I want to do for you, and it just helps us on the back end, and it helps, you can always pass about the brewing company, they need to account for it, between low fills and all the other stuff. Yeah, it's just, and then you just break it down and let them know, this isn't us being an ogre, and if they still think it, well, maybe that employee just has a chip on their shoulder, we all have those. So.
He can speak to it too, but there is sales tax applicability if you give something away, right? You can, but you potentially, would need to charge a use tax if you're making a product that you pay no sales tax on and then giving it to your employee. If you can cover the cost of goods, I don't know if you're an expert.
I think no, but I think a lot of it's also, like you said, it's judgment, and also it's like how much we're talking about. If you only have a couple guys that are brewers that are on occasion on like a weekly or monthly basis are taking a 4-pack or having a beer at a shift, it's a lot different than the guy taking beer every day or every Friday.
Full staff of people
Exactly.
allowing to have multiple shift drinks every day. Look at, when it was EDC and I was there, I was the brewer, I drank everything whenever, I never paid for beer when I was part of the agreement, but there were still staff, and we had a substantial restaurant, still do, that they're consuming that product, and even with shift meals and shift drinks and everything else like that, there is an implied, you didn't pay sales tax on this and you used it, so there isn't a sale, is there a use tax? My very basic knowledge of sales tax is, well, if I sold it at a cost that covered the cost of goods, on average, I don't really have to worry about sales tax implication. But I will tell you, the numbers guy like me, bring it in, comp it out. It's a lot easier for me to track comps so that I can see that everybody's really not abusing this except for Sally, the host, who somehow has 6 shift drinks every day.
If I can chime in, in the interest of fairness and sort of monitoring a little bit, I use Toast as well. I set up gift cards for all the employees, and everybody has the exact same amount, because some people were getting angry that other people were taking advantage. They didn't want to take advantage, and then they felt shitty that they hadn't taken advantage because somebody else was. And so in the interest of fairness, we put in an allocation that everybody gets on their gift card for the quarter, and they can use it for whatever they want to use it for, and then they pay a staff discount after that.
Let's save a little money though.
What's
if
that?
you're using a gift card in Toast, it's probably ringing in tax on that, and then you're actually paying New York State sales tax, full sales tax cost on 100% of the sale that you gave to your employee. You might not have to do that. Yeah,
I'm not sure
you
I
can
am,
make an
but
adjustment.
yeah.
Yeah, so can you make it listed as a non-taxable item within Toast?
I don't know that I would list it as non-taxable. If it were me, I'd say what's my average cost of goods, and I would look at what I spent on this
Yeah,
set
I
of
think
gift
it
cards,
depends
and I
on
would,
how
when I
you
report my sales tax, knock that sales down by 70% because I just want to cover it. I didn't really sell it to my employee, but I did consume it.
Yeah, I think it depends on how you bring it. And
Yeah.
Yeah.
I'll
It
take
depends on your
it
tax,
from
sales tax situation. That's the reason, when I give things to charities and stuff like that, if any of you use Toast, I don't use gift cards. I have a nice printed card that says, congratulations, you won this. Please email info@rationales.here. And so they email us, hey, I won this thing, and they think it's a gift card. I'm like, great, if you just sign up with this link, join my loyalty program, I will put X amount of dollars onto your loyalty card. That's a discount, it's not a sale. I don't have to pay sales tax on it if I give out those gift cards. And, you know, depending upon the situation, that could be hundreds or thousands of dollars, depending upon what we're giving out. So to me, it's a marketing expense that could be used more as a discount than the full cost of the sale.
I have kind of two parts.
Oh, far away.
Well, our policy, which I think has worked well for us and similar to things I've done before, is we have and this is manager discretion too. So, you know, somebody who was, you know, an asshole all day, not doing what they're supposed to, may not necessarily earn that shift drink. But we say pretty straightforwardly that you can have your shift drink, you may purchase one more beer after that, and then we ask that you move on to Strange Bird or whatever down the street, you know? But going back to the tax thing, we have a comp tab that all goes on to, when you're putting it on a comp, is that like how, is it still?
If you're comping it away and the business isn't collecting any money on it,
It's still
then more
the
than
same.
likely you're probably not paying sales tax on it, which is probably what most restaurants do. Is it technically letter to the law, correct, in New York State? Probably not. I think that if you got audited, they would go after that. I don't think they would, but I don't work for the state. And to your point, you know, I run a location of the EBC in a college town. At graduation, we get it handed to us, and my staff steps up, and they do a great job. And guess what I do? I buy them multiple rounds. You should be responsible. This is the one night a year that I'm going to do this, but it's okay as long as you don't have a policy of, hey, you're getting this free drink. That's what worried me. I have a policy that you're getting this use it or lose it thing every night, and then you're feeling like, I better use it because I'm not going to get it. I'm going to have it, and it's almost like you're encouraging them to drink, and then, God forbid anything ever happened. It's never happened in any of the places that I know or went to, but if it ever did, your insurance people are going to potentially take a pretty deep look at that. Do we want to, how much time do we have left? Want to cover?
Yeah, we got 10 minutes. I mean, the only other thing, just like we talked about, like the labor costs and tracking all in real time, it's like, obviously it's good for purposes of just costing out, but it's also good for seeing like when you want to be open and how often you want to be open, especially if you're a new tap room and you're trying to figure out like how many days a week do I really want to be staffed. Because you have, especially if you have the kitchen staff too, if you have that aspect of it, and then you have your tap room staff, it's like, all right, I'm going to look, and you might also have to be more seasonal, so you're going to look at trends and be like, you know what, I was open 4 days a week, let's cut it back to 3 because we really do well on this Thursday, Friday night, but you know, we were open on Sunday and Tuesday and it just isn't really working, let's scale back and kind of play with that. And so if you have that data available to you, you're going to be able to see that, and especially if it's in real time as opposed to looking at it months later, you can kind of see it, and you can also see seasonal trends, and maybe like certain times of the year you want to add that extra day on and then scale it back when we get into the winter possibly. So the last thing that we're going to talk about, we only got like 10 minutes, so we'll just kind of touch on it brief and open up for more questions, just as it relates to like event costs. So obviously you're trying to drive traffic into the tap room, so you might have things like live music or trivia or other types of things. So you're going to want to track that same way, like break that out the same way we talked about for the other items. And then it's just a matter of how you want to structure that. So maybe you're paying a band and they're just like, pay us a flat fee of, I don't know, whatever, $500 or whatever it is for the time period. But then if they're not actually getting people to come in there, then they're doing great because they get their money, but you're not actually getting that traffic in there. So maybe you can alternatively do something where you charge a cover if they're going to be there for an extended period of time and they get a portion of the door. It incentivizes them to actually bring people in there as opposed to they're like, well, I'm getting my 500 if I got 200 people in here or I have 2, so I'm not vested. So those kind of things can work out. And I mean, I've talked to a lot of breweries that have done things like trivia night, and I was like, how'd it go? And they're like, oh, it was great, it was packed. I'm like, that's awesome. They're like, but we actually lost money because we had to pay the trivia guy, and then we had to have prizes for the people that won. So like we sold more beer than we normally do on Thursday, but we actually lost money because we had to account for that. So it's kind of a learning curve there, and then they restructured and figured out if that made sense. Or it's a lost leader, where it's like, we lost some money on that night, but it gives brand awareness, people know about it, so now they want to come back another time on the weekend or things like that. So I don't know if there's other things that you want to touch
No,
on.
it's funny you mentioned that. We do a trivia night on Wednesdays. We pay for the trivia. We pay for the, 50 cent or 75 cent wings. We do a beer special on that night. And at the end of the day, we might do twice as much revenue as we would do on a Tuesday or a Thursday. But did we really drive more profit to the bottom line? I'm not 100% sure. Maybe you just made a little bit more money for your servers and you're able to, get a bump and make a little bit more money and get you through the slower times. But I think you have to look at whenever you, even bands, if you give them $500, you've got to do probably north of $1,000 worth of more revenue, because you have an implicit cost of goods and you have an implicit labor cost in there that it's going to eat up. That's pure profit you're giving away when you're paying that band. So you got to be careful with that. I think the other thing to touch on too is events that you do inside your facility, and then we won't talk about beer festivals or anything else like that. Everyone's in trouble. But just events in your town and in your village, right? Are you participating? I am a firm believer of high tide rises all boats. The more that you can do events, the more that you can collaborate. You guys all do great beer collaborations, but the more that you can promote and participate in those things in the town or in the village or in the city, wherever you're at in the area, just the better off you're going to be in the long run. You're going to introduce people to your concept, to your beer, to your restaurant. Sometimes they should be profitable. Sometimes maybe they're not, but they're just more of a marketing or branding, or just playing nice in the sandbox. But I think you got to take a look at that cost analysis and say, is it profitable, or is it only costing us this much and we're accepting what that cost is? And taking all those factors, fans, registration fees, promotion, everything else like that.
How do you deal with, let's say, somebody wanting to rent out their space for Saturday afternoon, evening, or a wedding, right? To take out their whole tap room. How would you, think of that?
So, lots of different philosophies here. Some people go the room fee, right? Like, I'm going to get a room fee. That room fee is taxable. Careful.
Right.
But some people want to go that route, and then they do whatever they do. Other folks, what I've seen a lot of is like, hey, there's a minimum spend here. There's no cost for the space. First of all, if you told me, hey, I want to rent, I know what I know. If you want to rent the upstairs of my restaurant on graduation Saturday, I'll be like, I do about $7,000 on that day, upstairs only. So if you're willing to spend $7,000, it's yours. And again, I'm thinking they're graduates, they're never coming back anyway. So, but if that was like a move-in weekend, and here's an opportunity to replace my revenue with an event, but I know if they come in on move-in weekend with their parents, they're going to come here multiple times when they come back, and they're going to come back and they're going to spend on graduation. I probably would take a pass on that event. But pricing it typically for me has been, what am I giving up? What revenue am I giving up to give that space? And get that amount, maybe a little bit more. That's typically guaranteed, right? Like those events, get a deposit and everything else like that, but get that revenue. To me, it's about replacing, enhancing, locking in that revenue. But I do know other folks that charge, facility fees, minimum spend. You have to look, you can legally do like open bar and beer and wine only and stuff like that. There are ways to do that as long as it's not the general public legally. But you got to kind of do some math on that. I like a minimum spend. One trick that I always like to do too is when they're not sure about alcohol, some people don't really want to do just cash bar because they want to buy something, but they're really worried about open bar, especially like rehearsal dinners the night before. They don't want everyone drunk and then hungover at the wedding. So we do beer ticket, or we do tickets. Hey, I'm going to buy you the first 2 drinks. Hand out 2 tickets to every guest that comes in on that party. Let them, the person who's throwing the party knows I'm only on the hook for the first 2 drinks. It's probably going to average, $7, $8, $9. This is what my bar tab's going to be. That's a great, and then they're cash and they're on their own. Or they swap tickets. And one guy drinks 3 beers, and one day he drinks 1 wine, whatever that is. That's another really good way to guarantee at least a little bit of alcohol revenue along those lines. And say, hey, you're going to buy these tickets, and we're going to charge you for 150 drinks. It's 50 people. If you only bring in 120, well, we'll just bring in an extra 30 because you're giving them that space. And you're giving them that. I like that model much better than trying to tell them they're going to pay for that space. But there's a lot of ways to skin that cat.
I think it depends on your location too. Some people are
Yeah.
paying for the space if you're like in like a scenic location or you're overlooking something and they like that paired with the beer aspect.
Yeah. They'll ask you if they can bring their own alcohol sometimes, or ask you, well, you know, can I bring an outside food? And it's like, no. We do make allowances for like a dessert. We don't do a lot of desserts if you want to bring a cake. And I usually say like, I can't do that because the health department or liquor license reasons or whatever that they don't really know. But yeah, you know, if they're just going to use the space and not consume a lot, sure. Okay, and it's not that busy in the afternoon. You do have to be careful as well that you don't want to completely push off your regulars and everything else like that. You can't do it all the time, I don't think. Depends on your situation, but you don't want to push them away. But, or can you do it in half?
Like you said, or instead of getting 5 o'clock on a Saturday, tell you what, I'll give you a deal if you want to come in and knock it out 2 to 4, 2:30 to 4:30, give them time to flip the space. And
I took one of those calls on the.
that's why I brought it up. I mean,
I can't do it at 6 o'clock on a Saturday in April, but you know what? If you can go from 4 to 5:30, I'd love to have your group. Oh yeah, we can do that. And they didn't give their ideal, and I give them a little bit because I would not be busy from 4 to 5:30 on a Saturday in April. It's about fitting it in, and once you start developing numbers, you'll see what those numbers are. And I'm a big fan of not shutting down the entire thing too. If there's any way to keep some part of it open, that keeps your regulars feeling like they can still come in, even if they can't get it, because it's so busy because you're running the event and you're packed in your space that's still open, they still feel like they had a shot, but you're just.
I'm interested actually to ask if I'm doing anything wrong on this one, is I actually do that kind of thing where if you get to a certain point, whether you're charging for the space or charging for that ticket or that. Sometimes what I'll do is if it is a prime time or it's a time where I want to make sure that somebody's not going to bail on me, I will take a deposit and have it applied to their tab so that they've paid a little bit up front, and then they feel like they don't, oh, we changed our mind and went somewhere else, you know, so that they don't bail on.
No, that's not a
Is there
bad.
any implication accounting wise to take a deposit still apply?
The deposit, presuming you applied it to the tab, would have no sales tax implication. It would just be
No,
like
that's
a.
fine.
It's just a prepayment.
Yeah, it's just prepayment.
Yeah.
Just obviously keep track of that, you know,
Yeah.
as far as liability, they pay you like, you know, last month for something this month, just so you make sure you keep
Yeah.
tabs on
Do
that.
you use Toast POS?
Yes.
It allows you to take deposits.
Yeah.
Like that, too. The issue is they don't come and now you have that money. What do you do with it, right? If you keep it as revenue and you don't give it back, then you probably would have some sales tax implication
Yeah.
on
You
that.
probably
because
should create like some kind of an item that's taxable.
You could also
that's
just
like
put it on a gift card.
deposits.
Yeah, if you're like, you canceled, but it's okay, you gave me time, or I had a busy night anyway, and I'm being generous,
Yeah.
and you want to give that money back, just take that revenue, put it on a gift card,
Yeah.
and then, yeah, at least you've got their money still, and then they got to come back and spend it, so. Mhm. You can
Yeah,
not
like if it's
fund it.
within 2 weeks, we're not giving it back, and then at least, because say you gave up a Friday night, and that Friday night you lost
Yeah.
5,000 in your one space,
Yeah.
you know,
And maybe you
that
turned
absorbs
down
the
another
sting a little.
event. You could have turned down another.
You turn down,
event, too.
if you're event driven, you absolutely turn down another event, or if you're not event driven, but you turn your reservations off, if you do take reservations, you surely lost reservations. You weren't allowed to see them.
So I've done a min spend and it works out good, but I've also had to do a cleanup cost because it was taking more labor to clean up after some of these events.
Sure.
That's a 6 one way, half a dozen the other. That's if you're building out your, depending on the number, if you're doing events just here and there, then you don't need to have some kind of a policy, but I don't know the size of your space, but when I work with anybody that has a decent sized facility where you're gonna do some of these on the reg, you're definitely gonna wanna put some kind of a package together, so when somebody signs up saying, listen, I'm charging you X as a base, yes, you can say it's normally X for the room, if you spend this much in liquor and everything else, I offset it, there are some hard costs that I'm not gonna be able to delineate or negotiate on, only because there is that labor component that no matter, you come in and you're clean, fantastic, it's great, but you have somewhere all of a sudden you got 3 staff members for 2 hours, then you're like, damn, or you needed to flip it within an hour because you got it back to back, and then that offsets somebody else, so they're irritated, and they gotta give them a concession. People usually can digest it. I find, if you tell them in advance and you explain the why, and it's not anything too outside of the norms, most people are usually pretty, amicable to that.
And even one last thing, because I know she's gonna cut us off.
Yeah.
Whatever
It's
you
like
charge that isn't a tip is New York State sales tax. even if you put an automatic gratuity of 18% on a tab, and do not, when you give that to the customer, say, you put 18% gratuity on here, you're more than welcome to add to that if you'd like. You certainly can adjust the amount if you'd like as well. If you don't do that last bit, and it's just, you're paying 18% no matter what, that is actually a service charge, not a gratuity or tip, and it is New York State taxable. It's a, I don't know anyone who's ever really gotten caught on it or anything else like that, but that is the nuance of the detail of when a lot of places do it. Which is our gratuitized large party. I teach the servers to explain that that is a gratuity, and you're allowed to adjust it in any way you want. Just do it in a way that kind of tells them, hey, don't knock it down and take it off. And in most instances, they're adding on top of that. But
Well, great conversation, I just want to give everybody a
And
time.
we can stick around if some
Yeah,
people do
we
have
can
a few
stick
questions
around.
after 5
I
minutes,
wanna-
lunchtime, so.
Yeah, I want to thank Eric and Jim and Dave for this great conversation.
Thank you for
Thank you so
our
much.